And it's the midweek edition of Business Morning live on Channels Television. Good morning, good evening, wherever in the world you're watching from. I'm Ladi Williams. Let's kick off now with the markets, starting with the oil markets. Now, we see oil prices fell today, taking a breather from a nearly 4% surge the previous day on receding fears of an imminent output cut by the Organization of Petroleum Exporting Countries and Allies, group known as OPEC+. Global benchmark Brent crude futures fell 21 cents to $100 a barrel by early trade after rising 3.9% on Tuesday. The U.S. WTI crude futures contract was down about 10 cents at $93.64 a barrel, having jumped about 3.7% the previous day. Both contracts soared on Tuesday after the de facto OPEC leader, Saudi Arabia, flagged the possibility of introducing cuts to balance a market it's describing as schizophrenic, with the paper and physical markets becoming increasingly disconnected. And Chicago grains futures extended gains today as a tour of key growing areas in the Midwest raised concerns that the size of the U.S. corn and soybeans crop will fall below expectations. The Chicago Board trades most active corn contract. The CV1 was up 1.37% at $6.64 per bushel after rising to its highest level since June 28th. Earlier, wheat jumped about 1.75% to $8.14 for half a bushel. Indiana corn yield prospects are lower than last year and below the three-year average. And scouts on an annual tour of the top U.S. production states found that out. That was yesterday. And Ghana and 7 other countries, including Kenya, Egypt, Cameroon, have agreed to begin actual trading among themselves under the African Continental Free Trade Agreements. This will be the first time since the agreement was signed about 2 years ago. Speaking at the Export Trading Company seminar by the Africa Export and Import Bank, Deputy Minister of Trade and Industry Herbert Crapper said this will be a historic move for the continent and expects other member nations to emulate. And back here, the federal government has recorded a total of over $2.6 billion worth of non-oil exports between January 2022 to June. Addressing newsmen in Abuja, the executive director of Nigeria Export Promotion Council, Ezra Yakusag, explains that the figure represents an increase of 62% of what was achieved in the first half of 2021, making the figure the highest since 2018. Take a listen.
Story can be seen from what we just read. We're talking of we launched our Export Power campaign in February. We're talking of 6 months. In 6 months, we're recording this. And like I said, these figures are not manufactured by NEPC. These are figures that we collected from or were submitted to us by the various pre-shipment inspection agents that are in charge of inspecting all non-oil goods, determining the value and destination of those non-oil goods. So we collected, they sent us the figures, and by the time we did our computation and this, we arrived at the fact that non-oil export, volume and value of non-oil export rose the highest in the past 5 years. That's from 2018 to date. The records are there for everyone to see.
And now to our first conversation. According to a new report by Fitch Solutions, household spending in Nigeria will grow by only 3.5% to $72.3 billion, about 30 trillion naira this year. And also, according to data extracted from the financial statements of some of the largest beverage-making companies in the country that are listed on the NGX, it shows that Nigerians spent over $1 billion on beverages such as alcoholic and non-alcoholic drinks in the first half of 2022. For analysis now, we have Chima Ukadike, Senior Consumer Goods Analyst at Vetiver, joining us right there via Zoom. Great to have you on the program.
Good morning. It's good to be here. Thanks for having me.
Morning. So we see that Fitch Solutions, they're giving that projection for household spending, and it's looking at, it's described it as only. How do you see the projection?
Sorry, it's described it as what?
They described that projection of only 3.5%. That's what they're expecting for consumer spending. How do you see it?
Well, so I'd like to speak to speak more to the trend of growth they are forecasting than speaking specifically to the numbers. So we know that coming from 2020, when the pandemic caused a lot of havoc in the economy in terms of businesses and in terms of consumer spending, there was that disruption. And then 2021 was really consumers just trying to rebound from what had happened in 2021, although we still saw low spending. So overall, I would say that we're coming from a low base. Right now, here in 2022, we're still coming from a low base. And so that is one factor that should support consumer spending in this year. But aside that, we know that consumers are still prioritizing um, essential. And more importantly, they're trying to prioritize these products that will fit into their current inflation beating income level, with what is happening with inflation and, given that income levels haven't risen by as much, consumers have to be able to adjust their spending to fit with what value is left after, inflation's effect. But just as well, producers have also been able to um, adjust production to bring out new products that can fit or match these new needs of the consumers. So what we're seeing is that a lot of value products have been um, brought into the market, which are a lot more affordable for consumers. So this has enabled volumes to stay somewhat stable. So based on this, we expect that consumer spending will continue to rebound. As for the numbers, like I said, I'm not going to speak to the specific 3.5% that they've projected, but I agree with them or align with them in sense that we expect to see growth. And one more thing, is that this is a pre-election year, so by the end of the year, we should start to see a lot more spending. So that should really prop the growth that has been forecasted.
Interesting. And another interesting part of the report says that Nigeria spent over $1 billion on beverages in the first half of 2022. What does that tell us about the state of the average consumer in Nigeria right now?
To really understand that, I think we should look at the comparable for at least 2019. So if you look at the NBS's report on consumer spending for 2019, it reports that consumers spend, I think, about 1.4 billion naira on beverages as a whole. That's alcoholic and non-alcoholic beverages, and that's for the full year. So looking at what we've seen for the half year, that's around 700 billion naira if we're looking at the parallel market rate, or below that if we're looking at the official market rate. So this is less than, and if we annualize that figure, it will be around 1.4 billion, which is kind of less than the 1.5 billion that we saw in 2019. And then if we add adjust for the fact that we've seen lots of pricing increases this year, it kind of shows that volumes haven't been as strong as they were in 2019. So it just means that a lot of this growth has come from pricing, and it means that value to the consumer has not really been preserved. So I think what it means for the consumer is that they've not been able to get as much value as they were able to get in 2019 or in 2019 comparable year, and this has been a direct impact of inflation on the consumer.
Quite interesting. I guess the consumer goods companies, most especially the brewery giants, are smiling to the bank at this time, despite reducing purchasing power. But how do the non-alcoholic beverage makers, how do they perform?
I think they did quite well as well. Like you said, you're quite correct. The brewers, the alcohol makers were very posted very impressive results, especially in the half year period. But even if you look at the brewers themselves, some of them or many of them still produce non-alcoholic beverages like malt. And from reports from management, you would hear that that segment pulled a lot of weight in driving revenue growth for the period. So we saw about double-digit volume growth for the malt segment, and this is despite the tax on carbonated drinks that was introduced earlier in the year under the Finance Act. So I think we can say that the non-alcoholic segment has grown or has done well as well. And if we even want to look at the other kinds of players in this segment. So we'll look at the milk and chocolate beverage makers. We'll look at a player like Nestle, for example, and look at the growth in its beverage segment, which was like 26% year on year for the half year. We can also say that they were smiling to the banks as well. But just to note that this has really all been from as a result of increased pricing.
And we saw inflation for July. It came in quite hot, over 19%. And I'm wondering, how is the inflationary environment, shaping consumer spending going forward?
Well, so I remember, as I mentioned earlier, a lot of consumers have tried to tailor their purchases to, be in line with their wallets and what has happened to their wallets due to inflation. So we've seen a lot of downsizing in terms of purchasing. So if you were previously buying premium products, now you want to look towards the middle tier or lower tier of the market for those same types of products. So that's what we've seen so far, and that's one way that inflation has affected the average consumer really.
The administration has voiced concerns of having, revenue problems at this time, and is looking to consumers and services as a target for taxes and tariffs. And I'm wondering, how much can the consumer take at this time?
Well, so for the consumers, I think it would really depend on what the players decide to do. So we know that earlier this year there was a sugar tax that was imposed on carbonated non-alcoholic drinks. In 2017, the excise duty on alcoholic beverages was introduced, and in June this year, another round of excise duty increases have been introduced across beer, wine, I think tobacco as well. So but it's supposed to be phased, over 2023, and 2024. But I think what would happen is, or what this will depend on is what the players decide to do. So if they decide to absorb this cost um, themselves and not pass this cost to the consumers, then the consumer may be left unharmed, as status quo. But if they decide that they want to preserve their margins, which we may likely see, or try to somewhat maintain their margins, then you would have to pass this increased cost onto the consumers. And what we'll see is an added impact of what inflation has already done to the consumers. So I think consumers would then be worse, would then fare worse in that scenario.
The firms are in it for profit, but what do you think can be done, to, create some kind of buffer for consumers at this time? Are there any options right now? Because I saw on social media yesterday a lady complaining about she was cooking a pot of stew, and she showed that pot of stew cost her about 15,000 naira for just an average pot of stew. What kind of buffers can we expect?
So the problem is that the producers themselves are facing a lot of cost increases on their own end. So if we look at, for example, flour millers who have to import a lot of wheat, given that we produce about 1% or less than 2% of wheat in Nigeria, and given the Russia-Ukraine crisis that is ongoing, they have to deal with these increased costs themselves. So I think that there could be a balance in terms of trying to manage how much of these costs is passed on to consumers, which will then affect their margins. But other than that, I'm not sure that a lot can be done, save for trying to, promote more the import substitution plan. Try to encourage more producers or more manufacturers to use more locally produced goods, which they are trying to do. And so it would then be trying to encourage more locally grown products. Going back to the farms, trying to get more wheat to be produced in Nigeria, sugar, for example, and all of that. For those things that can be produced in Nigeria, that's it.
That's looking inward at this time. But what do you see coming for, consumer goods stocks listed on the NGX? Yesterday I saw Honeywell Flour, International Breweries. They were on the top gainers yesterday. But what are you seeing coming for those stocks?
So I think this would, I'd like to split them into food, brewers, HPC, and sugar players. So for the food segment, there's a lot of pressure in terms of cost. With the onset of the Russia-Ukraine crisis, global wheat supply had declined, which caused wheat prices to rise significantly. If you look at other commodities like barley and sugar as well, prices have continued to rise given what the backdrop of the Russia-Ukraine crisis. So with the added impact of FX challenges, in trying to import these materials, they'll continue. I think they'll continue to see cost constraints, which would impact their margins and their bottom line. In terms of the HPC segment, we've seen a lot of growth for the segment, especially as economic activities have resumed and a lot of people have been out and about. There's a lot of emphasis being placed on personal and home care still. In terms of the brewers, they, like you said earlier, had been fine to the bank in the H1 period, but there's the problem of top line and bottom line sustainability for the second half of the year. If we consider the fact that there's an excise duty increase that has been implemented at the second half of the year, which is the 1st of June, added to the fact that there's also the carbonated tax that was implemented at the beginning of the year that is going to affect their malt segments and the like. I'm not sure that we would see sustained performance for the second half of the year, especially as volumes have started to decline slightly with the increased pricing that we've seen so far. So for the brewers, the outlook is not as strong as we had seen in the first year. For the food players as well, given that they've been able to focus more on value products, we may see volumes sustained for them, and with stable pricing, we should see them still coast at the end of the year. But for the sugar players as well, I think we should still see decent margins, especially as sugar prices are starting to show a slight decline internationally. That's raw sugar prices. So overall, I think it will be a mixed bag. I think the sectors to watch would really be the food players, given what I mentioned earlier. For the brewers, I think the jury is still out to see how they'll be able to sustain their top line and bottom line for the second half of the year.
All right. Well, we'll keep watching those stocks. But now, what are you seeing for consumers, for the rest of the year? Do you see more pain ahead?
Well, the pressure points still remain. For example, the impact of rising global inflation on commodity prices still remains. The fact that we still have to import, or players still have to import a lot of their inputs still remains. The FX challenge still remains, and that would filter into food prices and, energy prices as well. So in terms of the consumer wallet, we should still see inflation affecting them significantly. For August, inflation target or inflation projection is about 10.63%, and this may continue to get to grow or to compound as we go into the end of the year, given what is happening. But will depend on what is happening, internationally with the crisis in between Russia and Ukraine, and with the FX liquidity constraints.
All right, Chima. Well, I guess we all need some kind of break at some point this year. Thank you so much, Chima Okwadike, Senior Consumer Goods Analyst at Vetiver Capital. It was great having you.
Thank you.
All right, now we'll take a break. When we come back, AFEX Commodities Update is next. Do stay with us. This is Business Morning. Welcome now for AFEX Commodities Update. Let's get a sense of how your money performed on the exchange for the week ended 22nd. Join us now is Grace Abikoye, Strategy and Corporate Finance Analyst at AFEX. Join us right there from our Abuja studio. Great to have you, Grace. Can you give us a rundown of performance at the exchange for the week ended?
Hi, Ladi. Good morning.
Morning.
Okay, so on the commodities, good morning. On the commodities market, total turnover surged by 3 times its previous value, closing at 2.37 billion naira. Number of deals surged by 2.49 times its previous value, closing at 6.9 contracts. The number of deals declined by 1.09%, closing at 271. The AFEX commodity index increased by 0.33%, closing at 445.7, and the AFEX export index declined by 4.02%, closing at 187.44. Now, on to the volume of contracts traded on the exchange. We saw that paddy, rice, and wheat accounted for bulk of the trades. And as paddy, rice, sorghum, sesame, cashew, and wheat contracts traded increased. And also, we saw that maize, soybean, and cocoa experienced a decline in the volumes traded. Onto the commodity of focus, paddy rice was the only gainer as its price increased by 7.91% at a value of 20 naira, closing at 272 naira 81 kobo. Maize declined by 3.07% at a value of 6 naira 16 kobo, closing at 194 naira 42 kobo. Soybean declined by 2.10% at a value of 8 naira 42 kobo, closing at 391 naira 89 kobo. The clean sorghum declined by 1.29% at a value of 3 naira 84 kobo, closing at 294 naira 81 kobo. Clean sesame declined by 1.25% at a value of 10 naira, closing at 790 naira. For wheat, the price remained the same at a value of 380 naira. For cashew, price also remained the same at a value of 689 naira 88 kobo. For ginger, price remained the same at a value of 1,020 naira 64 kobo. And cocoa also remained the same at a price of 1,198.3 naira 3 kobo. And for more information, please visit our website, African Exchange, and also follow us on our social media handles, ComX by AFEX and AFEX Nigeria. So, Ladi, that's the summary of everything of the occurrences or the changes that happened in
Right, I guess the market didn't do too badly. Thank you so much, Grace Abikoye, Strategy and Corporate Finance Analyst at AFEX. Thank you. All right, taking the conversation forward now, some quarters believe the Nigerian commodities market has great investment opportunities. And AFEX trading platform, COMEX, has simplified access to alternative investments in the commodities market. Now, to discuss the relevant opportunities and the available ways for investors to learn more about the market, we have Hemense Oka, Vice President, Corporate Services at AFEX. Great to have you on the program.
Good morning, Ladi. It's a pleasure to be here.
Good morning. So what do you think investors should consider, in the Nigeria's commodities market before investment?
Sure. So I think it's a risk management play, honestly, for them to diversify their portfolio. It's very difficult to pick a stock or an asset class that's actually going to perform well. So if you add commodities markets into the mix, you're most likely to spread the risk among various asset classes and then overall see an improvement in your portfolio. Also, commodities are generally sort of known as a hedge against inflation. You just reported earlier about inflation nearing 19%. That means you would have lost a fifth of your value if you just held your assets in cash year over year. So with commodities, you see, or with inflation, you see the underlying price, the consumer price of the assets increasing. So if you're actually investing in those commodities, you'd also provide a hedge and be able to preserve your wealth that way. And lastly, it's an impact play. On a personal level, you'd be providing market access to smallholder farmers, enabling them to improve their livelihood, send their children to school, take their kids to the hospital. So overall, you'd be benefiting the economy in that way.
So I wish you told me, earlier in the year to invest in the commodities market, because that market has done incredibly well, for the first half. But I don't know if that's going to happen for the rest of the year. But we're still seeing volatility in that market. But how much easier is it to access investment opportunities in Nigeria's commodities market today?
Yeah, it's significantly easier than it used to be before, and a lot of people just aren't aware. I just recall when I was growing up, my mother used to call me from the village and ask me to send money back home so that she can purchase stocks and put them in some bacha or warehouse somewhere. And like most of you, I'm sure you would have gotten funny stories at the end of that, and maybe wouldn't have tried such an investment again. But nowadays, there are a lot of digital platforms that enable and simplify that process. I'd have to mention the COMEX platform by AFEX. Easily downloadable at any Play Store. You go on there, and within a few clicks, you can start trading commodities. Just from the privacy and the simplicity of your home.
And what do you think are the key instruments or tools that investors should be aware of, which they can include in their portfolios?
Yeah, so there's a plethora of different instruments on the platform ready for you to explore. At the basic level is our spot contracts. Those are essentially securitized commodities that you can invest in and take advantage of any price arbitrage gain over a season. We then also have FETC, which is essentially a basket of goods that are combined together. Same theory of portfolio diversification and risk management. It allows you to take advantage of any gains taking place in any of the commodities in that basket over a season. And what's live right now is actually the trade finance notes. So Nigeria did over 500 billion naira worth of agricultural exports last year. And so that's a huge opportunity for investment in that specific sector. What we do at AFEX is we raise this note. Different market players, aggregators come to us, provide us contracts that they have for exports. We then finance them. This is a fixed income instrument, 14% annualized yield. When they bring those commodities into the warehouse, we then issue an electronic warehouse receipt to them, bring that to us, and then finance them on the back of those commodities that are brought. So everything is secure, managed by a collateral manager on site, and then you can expect your returns, again, annualized 14%, after the investment period.
Quite interesting. But what do you think investors can, learn more about these markets, to gain that knowledge, they need to actually make a profit?
Yeah, so there's a lot of information on AFEX websites. Grace mentioned africaexchange.com. We release periodic reports specific on commodities and the market in general. So please take time to review that. Commodities market in general is also a supply and demand market. So any information that you get on whether it's a booster year for harvest, whether any government policy is affecting the inflow and outflow of commodities, any of that is going to help your understanding and build up your experience in the market. And lastly, we do have another product coming out. It's called Tradeverse. It's going to be a comic based on the commodities market, so be on the lookout for that release as well.
Quite interesting. I'll be looking out for that. But, Emense, we've had quite a bull run for the commodities space. Are you expecting any major pullback at some point for those investors that don't like to buy into a bull market?
Sure. No, there's going to be that reset that takes place on an annual level. We're seeing some recession type dynamics at play right now. And so, but naturally, there's going to be that recyclical ignition that's going to take place in a few months, and that will be the prime time for them to come in and and invest. So they can hold on and keep on storing up their money and then look for an opportune time to invest.
Quite interesting. Thank you so much, because I don't like buying into bull markets. Thank you so much, Hemense Orka, Vice President, Corporate Services, AFEX. Thank you.
All right, no worries.
All right, now, so after, we're going to we'll take a moment. Now, when we come back, we'll head to the markets. Do stay with us. Now, let's drill down on the markets. Quite a bloodbath yesterday. I'm sure Aniete has a lot to tell us today. Aniete, the suits.
Laddie.
Yeah,
Laddie.
it was a massive bloodbath.
It's what you call a massive bloodbath. I think that's even the worst so far for this month, in the fourth trading week of August. And then, of course, we never saw it coming, but of course, I had mentioned yesterday that
I
this
remember
market...
you said that.
Exactly.
Yeah, 48,000 something.
Exactly. You shouldn't just be optimistic about that. Especially when you take a look at the index, that it was at 49,000, but just in one fell swoop, market was just, as a matter of fact, deeper below the 49,000 level. So let's get straight to that market. 1.60%. That's how the market dropped at the close of Wednesday's trading session, and that translates to a massive 426.07 billion naira loss on the market. So now, the market's loss was primarily due to losses from big companies such as Bua Cement, Dangote Cement, Bua Foods, Seplat, quite a number, 20 losers against 9 gainers on the market. So now take a look at the board there. The board has the biggest impact was felt on the oil and gas sector. That's no thanks to the more than 5% loss from Seplat and some other oil market components there. Then, of course, I mentioned Dangote Cement and Bua Cement. Take a look at the impact there. 4.62% is what it had on the market. And so far, the market's loss has reduced, has increased further to 3.6%, while the year-to-date gain has reduced all the way from 15.5% to about 15% to 13.7%. But when you take a look at the activity chart, the activity was increased. The volume was up by 66.34%, while the value was up by 144.64% at 3.1 billion naira, in contrast to what we had on Monday. But the number of deals carried out, it was down by 9.76% in contrast to what you had on Monday. Now, so that's about the market. But let's turn our attention now to the fixed income market. The fixed income market, it traded quietly. The average yield there, it was unchanged at 12.6%. Across the benchmark curve, the average yield paired at the short end. And of course, we were also expecting that there will be a primary market auction by the Central Bank of Nigeria. So to give us more insight into that, let's talk to Chioma Udu, a fixed income market trader at GT Bank. Thank you for joining us, Chioma.
Thank you for having me. Good morning.
Okay, now I'm sure all eyes, investors' eyes, are mostly focused on the primary market auction to be conducted by the Central Bank of Nigeria today. So can you bring us up to speed with what's going on at the fixed income markets?
You're very correct. All eyes are on the auction we have today. DMO is offering 295 billion across 3 tenors, and most of the offerings is at the 1 year, the 364, about 280 billion is offered at that space. Now, currently, the money market is short about 47 billion. And as a result of that, we've seen a lot of rediscounting of the short end of the curve, of the yield curve, where you earlier mentioned that is currently trading at an average rate of 12%. This is because we've seen banks and other investors trying to rediscount their treasury bills to fund and to provide liquidity. That's cash. What we expect at the auction today is we expect that we're going to see rates trend up. Inflation is currently at 19.64. We've seen the central bank bump up the savings accounts rates to about 4.2%. So all these things put in consideration, and honestly, any investor that's going to go to the auction will try to trend up from the 1 year currently at 7.45 upwards. So we expect that rates are going to trend up across the 3 tenors offered at the auction.
Okay, so one last question before I let you go. Do you see investors moving maybe from the fixed income market into the equities market, because the two of them, there's a correlation between the two markets. So what's your opinion on that?
Well, what we've noticed that the investors is trying to get the best of what they can. So we've seen a mixture of fixed income and then the equities markets. But what we expect is that we're going to see a lot of interest in today's auction. We're going to see investors throwing in high yields to try and get, as much interest paid on their cash at this auction. Like I mentioned, inflation is currently at 19.64. So what investors are going to try to do is to get more returns on their liquidity right now.
Okay, thank you for that information, Choma. We'll keep our eyes on the market. So, Ladi,
Yeah.
well, I would say it's not really gloom for the market. Yesterday we had some information, we saw the board there, the activity was still healthy, volume was up, value was up, deal was negative. But we also had some corporate earnings result, Zenith Bank's half-year result.
Right.
It came out very strong. So
all I'm looking for now is how to beat inflation. Me and every other investor right now in Nigeria are trying to beat inflation. She said she talked about those yields at this time. And at the end of the day, we're trying to get much more than about 19.6%.
Exactly.
So we're trying to beat that. And I'm just looking for what market is going to do that. Maybe the equities market, maybe this week, I don't know if it's going to give us that one big push to take the market up at some point for the weekly analysis, I mean.
Yeah, I think my crystal ball, that's my own personal crystal ball, financial crystal ball, tells me that there will be some bargain hunting by investors, because what you saw yesterday was more of, it's going to cause some people who would be, the bargain hunters to go into some of those high-value equities. So that's my projection for the market.
Maybe I might turn into some kind of bargain hunter at some point.
Exactly.
Thank you so much, Anete. All right, we'll take a break now. When we come back, we head to London. That's in a moment. Just stay with us. This is Business Morning. Back, still watching Business Morning live on Channels Television. Let's head on to London now, see what's happening. We have Juliana standing by right there. Great to have you, Juliana. I must say, that holiday looks good on you.
Thank you, Laddie. It's great to be back.
Exactly.
Back from Africa.
All right, great to have you back. And a lot has happened, since you've been gone in the UK. And we still have that cost of living crisis. And now we see the UK's largest energy group is saying that shielding families, UK families, from these bills could cost up to £100 billion. It's quite a lot of money.
It is a lot of money, and you're right. The cost of living crisis hasn't gone anywhere in the past 7 days. In fact, it appears to have gotten much worse, especially because we had that inflation data last week showing that inflation has reached 10.1% in July. It's expected to reach 18% in January, which is why energy bosses are rallying around trying to do whatever they can to avert a crisis, which is expected to happen anytime soon, because on Friday, Ofgem, the energy regulator, is expected to announce that the energy price cap will rise 80%. So at the moment, the highest amount that energy firms can charge a family per year for energy is £1,975. On Friday, that's expected to rise to £3,500. That is an awful amount of money, and it's an amount that millions of families cannot pay for, which is why there have been so many meetings. And Keith Anderson, who is the CEO of Scottish Power, he's been meeting with the Business Secretary, Kwasi Kwarteng, and they've said that it is going to cost about £100 billion to freeze that energy price cap. So to freeze it today at that near short of £2,000 for 2 years will cost cost £100 billion. Now, that is a worry to some energy firms, which is why they've come up with some sort of scheme whereby commercial banks will give these energy firms competitive loans, which will be backed by the government. So any shortfall between the cost of wholesale gas prices and the energy cap will be paid for by these loans, and then over the next couple of years it will be paid back by energy firms. Now, it kind of sounds similar to what we heard a couple of weeks ago from the Labour leader Sir Keir Starmer, who suggested that the energy price cap is frozen. But we're kind of running out of time because, of course, today is Wednesday. Friday we're expecting the announcement. Parliament is still in recess, but hopefully when it does sit again, this windfall announcement can be made so people can breathe a sigh of relief knowing that they can heat their homes during the winter and put food on the table. Right, everyone needs to breathe at this point. The squeeze just keeps squeezing. A trade union Congress is calling on calling for a minimum wage hike, about £15 more per hour. How's that looking? Well, it's an interesting discussion. I think it's definitely something that all employees across the UK would definitely say that they want to receive. At the moment, minimum wage in the UK for anybody over 23 years old is about £9.50 an hour. Using my quick calculations, I believe that's probably about 8,500 naira per hour. It may sound a lot, but considering how much it costs to live in the UK, it really isn't. And lots of people, in fact, millions of people, are literally living wage to wage, taking out loans in between just so they can survive. And this is even when you are working a 40-plus hour week. So Frances O'Grady, who is the head of the TUC, she has suggested to the government that, you know, the time for low pay Britain is over. Hike that wage, put it up to about £15 an hour. Therefore, people can heat their homes. People can afford to buy a meal outside every once in a while, and they won't be living from paycheck to paycheck. Again, inflation is at 10.1%, expected to reach 18%, which is a huge amount of money. It already feels like 50%. A lot of people saying 10%. It doesn't feel that way when you're going to buy a coffee. And so all these proposals are going through, something that I'm sure Liz Truss and Rishi Sunak will be mulling over. We don't have very long now until Boris Johnson's successor is announced on the 5th of September. The race has been going on for an incredibly long time. In fact, some people are saying we've seen enough of them now. We've made up our choice. Give us a new prime minister so the country can start running again and we can tackle these really serious economic issues that are causing lots of concerns for millions of people in this country. Right, really serious issues. And it's quite interesting in Nigeria, cost of living is also getting quite expensive. Thank you so much, Juliana. I'll see you at 1:30. See you then. All right, now let's head on to the markets. Now we see Bitcoin remained well above the 21,000 support zone. BTC formed a base above 21,000 and started a consolidation phase. Let's head on to the markets now. Let's see how it's looking there. We see a fear greed index. I said it yesterday, it's 25, and we might be getting to extreme fear. I said that yesterday, and we are back now. Extreme fear, 25 points. Talking about the fear greed index, sentiment in the market right now. Back to extreme fear. We've been with extreme fear earlier in the year, and it was for the longest time, but we're back there now. Let's look at the market cap, $1.03 billion. We hit quite a jump there. 2.52%. It was below, it got below the $1 trillion mark about yesterday, but we see that bounce back. Volume traded down 1.39%, and we see Bitcoin dominance is sitting at 39.86%. Let's look at what's happening with the price of Bitcoin at $21,357 this morning. Jumped there about 3.98%. Volume traded $32.30 billion. Look at Ethereum. That's trading at about $1,635. That's down 0.65% this morning, but we're still seeing quite an improvement with the price there. Volume trading in Ethereum, $18.92 billion. Let's look at the top alts by market cap. It's all green. We're seeing quite a jump this morning for most of the markets. BNB there trying to get back above $300. Let's bring in my guest now is joining us to talk about DAOs. Great to have you, Olayimika. I don't know if you can hear me, Olayimika.
Dow
Yeah, good morning,
consultant
Mr.
right
Ladi.
there.
Good morning, Mr.
Great to
Ladi.
have you on the show for the first
Yeah,
time, Olayimika. So I've been hearing a
super
lot
excited.
about DAOs now. That's decentralized autonomous organizations. That's been trending for a while now. But before
Sure.
we go into that, what are DAOs exactly?
Okay, Mr. Ladi, thank you. Okay, DAO is the acronym for Decentralized Autonomous Organization. It technically refers to crypto communities in Web3, owned and funded by crypto investors. A DAO is a practical example of how people are able to leverage blockchain technology to make impact in society. I'm going to give you an example. Recently, we had the first DAO in space, MoonDAO. It sponsored an ordinary person to outer space. Like it happened for the first time in history. No DAO has ever done that. And what's so unique about it is that there's just a group of crypto investors, like a non-conventional organization, an internet native organization of people with a shared interest. So it's really amazing to see people coming together to, leverage blockchain technology in the case of DAOs. So mostly DAOs have actually been at the forefront of making change in society via blockchain technology. Okay, so to take this further, I think if you to give you a practical example, in 2020 when we had the NSAS protest, okay, you saw what happened when some people were trying to raise money using cryptocurrencies, okay, to sponsor the protest, okay. So that gives you a very clear example of how a DAO can be formed. At the time, we missed an opportunity to form what could have been the largest DAO in the whole of Africa. Like young Nigerians took to the streets. Okay, so much of this effort was coordinated on the internet. So you saw people coming together, using cryptocurrencies to sponsor protests. So that gives you a clear example about people can leverage blockchain technology to make impact.
Quite interesting, Olayimika. But how does one join a DAO? How do you get access into those organizations?
Basically, it's crypto related. So what it takes is you've got to buy the governance token of a DAO. Okay, so that gives you membership of the DAO. It gives you certain benefits. So it means if you're not in the crypto world, you're kind of you're going to be missing out. So you've got to own to buy the governance token of the DAO. Okay, they're mostly available on crypto exchanges. So you buy them and then it gives you membership of the DAO, and you get to see what they do via their social media handles like Discord, Telegram, etc. So you get to see some of the things that they do when you join their social media platforms.
All right, quite interesting. We'll keep tracking and see how those DAOs keep performing and impact the world. Thank you so much, Olayimika Jibril, DAO consultant. It was great having you on the program.
Thank you, Mr. Ladi. Very nice.
All right, let's see what's happening with the top 5 gainers there. Just Chile's token topping that counter up 11.60%. XDC 3 cents up 11.50%. We see Nexo seeing quite not bad gains this morning. Let's see what's happened to the top 5 losers there. We're seeing the stable coins in the top losers counter showing that traders are getting back into the market at this point. All right, that's it for the markets. Thank you so much for watching. Don't forget to join us by 1:30 in Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just search for Channels Television on YouTube and you can watch all our other videos. Thank you so much for watching. I'm Ladi Williams. Bye for now.